We're live. Okay. Hi, Mark. Welcome to Venture with Grace.
Hey, Grace. We're glad to be here. Thanks.
Awesome. So to start the show, I want to give a quick shout out to our amazing sponsor. Our sponsor today is Quill Meetings. I love Quill for a couple of reasons. One is it's really easy to get a summary of like the key points from a meeting, and then there's also a ton of like template that you could choose specifically for like VC memos or like founder meeting notes with VCs. And the notes are just one click away from being shareable to your team, and it creates a quick to-do list so you don't have to miss anything or take notes in the entire meeting. And if you want to try it out, please download Quill and give it a try. The link is in the comments, and it's definitely one of my favorite products. Definitely give it a try. Okay, so Mark, again, welcome back. Welcome to the show. So why don't we start with your background? So you were an executive at a very well-known security company, and like you are currently a partner at Acrew Capital. What are some core lessons that you've learned as a like high level like operator to now as a VC?
Yeah, well, so it's interesting. The job that I had when I was a software executive, I worked at a company called Imperva, which was a security company. It was a great ride, once Series A to IPO and beyond. And I had a lot of different jobs there. It was a great growth experience for me. My last job, I had a pretty big team, and it was all remote. We had our engineering team in Israel, so I had like I don't know 270 people, I think, in my organization, and 200 of them were in Israel. I think it really prepared me for being a VC because when I started thinking about being a VC, I talked to my current co-founder, Teresa. I had talked to her a lot over the years. I had met her before I joined Imperva. She was the Series A investor in Imperva. And she was telling me like what to expect when I turned to the dark side or saw the light, depending on your point of view, and became a VC. And she's like, well, a lot of people who are operators come to the VC world and they get really frustrated because they kind of know what they think these companies should do, and the people at the companies, the CEOs, don't listen to them, and it's really hard for them to adjust to the scenario where it's not like they have a team that they're managing and they get to sort of direct. And that is true. I would say, I consult with my founders. Hopefully I do that in a humble way, and the ideal situation is you get along well, and they value your input, and they have good response to it. And sometimes they do it, sometimes they don't. But it's not like I'm just directing them to go do things. And the reality is, when I had that team of 200 people in Israel, they never really listened to me that much anyways. Like I kind of had, it was the same scenario. I had basically 5 key people that worked for me that kind of ran the whole organization over there. And they operated, sort of like my CEOs operate today, which is, they were, super smart people and very capable. And so like, I didn't really need to tell them what to do, but the relationship wasn't one where I was like, go do this, and they went and did it. So I was already used to that. But I think that was something that really helped me. I do think people that grew up in different kinds of organizations with different kinds of backgrounds that might not be used to that, I think they do find it hard in venture.
I think it's really interesting that like, a lot of like VCs are with operating experience, and there are a lot of things that you think you could support people, but in the end of the day, the founder have to like or like the founding team have to work on it themselves. And like I wanna start with, since like you're an expert in the cybersecurity industry. Why don't we start with like the current market trends? The I will like leave the floor to you. We can talk about the IPOs as well as
So
the ARR and everything.
yeah, I would say there's a couple things going on. One thing that's happening in a big way, actually, there's another acquisition yesterday. There's a lot of early stage companies are getting acquired. I think Trustar got acquired by Netscope. At least it was announced yesterday. And that's a continuing trend. And I think what the underlying trend is pretty interesting. The speed at which companies can get big has really increased in the last 20 years or so. So if you look back 20 years and different cohorts over the ages, like how long it takes companies to get to 100 million in ARR, which used to be a really significant number, because once you got to 100 million ARR, it felt like you were kind of on track and ready to be an IPO. But the speed by which companies get to 100 million has really dramatically decreased over the years. I think the most recent one that went really fast was Wiz, and they did it in like 18 months or something like that. Something really, really fast. Used to take 10 plus years. On the other hand, there hasn't been an IPO for like almost over 3 years now. I think the last security IPO of any significance was in September of 2021. So companies are not getting into the public market. So 100 million, even though there's a bunch of companies that are over 100 million, they haven't gone public. In fact, there's probably like 7 or 8 now that have sort of made public statements that they're over 200 million in ARR. They're still not public, and part of that is that the IPO window, I think, is closed at least until next year. But the reality in the market is the speed by which the market adopts technologies, which can be measured in kind of how fast companies get to revenue scale, has dramatically increased. But the speed by which the scale at which they go public has also dramatically increased. So there's like something that has to give. What's currently giving is that the big security platforms are acquiring. And I think one thing you're going to see is that private companies are going to make a lot more acquisitions before they go public. That didn't used to be kind of the standard operating procedure. You would kind of get big enough organically, go public, and then that would bring you the capital that you could then start to make acquisitions. And a number of companies were very successful at that. I think Palo Alto is probably the most recent, like very successful example of that. But I think what you're going to see change is that private companies are going to make multiple acquisitions before they go to IPO. And actually, the Acera acquisition is a great example of that. Netscope is a big company, but it's not public. I think they're probably planning to go public in the next cycle that the window opens. We'll see. But they made a number of acquisitions already. Actually, I sold a company to Netscope 5 years ago. So they've made multiple acquisitions. I think you're going to see a lot more companies like that before they go public, they make sometimes pretty substantial acquisitions. And that's because they got to get to that scale to get big enough to be a public company.
I wonder when it comes to like the later stage acquisitions, maybe we could use like Wiz as an example. So Wiz was like there's a news about like Wiz was gonna be acquired by Google for like $23 billion, and then they walk away with from the deal in like July 2024, and instead they will like pursue an IPO. So I wonder like why would Google acquire Wiz? Like what's the kind of value proposition for it, and how do you think about like who will acquire who for like what reason in the security?
Yeah, well, so my opinion is that would have been a bad, and I've said this publicly, I think that would have been a bad acquisition by Google. And I actually kind of doubted it from the beginning that the transaction was going to happen. The valuation was quite high. I think Wiz is a great company. Everything I hear about the company and the product is positive. But I think it's there's this term in the VC world which is priced to perfection, which means for them to justify the price, they have to be perfect. And then it's possible they will be. Every once in a while that happens, but it means that if I were somebody looking at investing or buying Wiz at the price, these different prices that are being thrown out there, I actually think there's a lot of risk in that business, because if they have a misstep, and it might not even be something that's under their control, world events these days seem crazy. That could really impact the outcome for the company. And so I think, the reason why Google would have wanted to do it is that I think it's a very attractive thing for the large security platform, for the large platforms to think about having security integrated. It's interesting, historically in enterprise markets, that has not been the thing that really has dominated the sort of way that enterprises use security. Usually they use third-party security products. I think there's a reason for that. It goes back all the way to a lesson that of all companies, IBM, I think, learned about mainframes back in the day. And but I think it's a pattern. I guess history repeats. The lesson that I think IBM learned is they made mainframes. They charged people a lot of money for those, like lots and lots of money for those mainframes. And then they went back to those customers and they said, "Okay, we sold you this computer. Now we want to sell you security." And the customer's like, "No, wait a minute. You sold me something that's insecure. You need to give me the security." So they weren't able to charge for the value of the security products. But what they looked out in the market, and other companies that were not IBM were able to go to those same customers and say, "You bought this IBM thing. It's not secure. We're going to sell you security for it." And the customers would pay for that. And so I think IBM took the decision that they were going to make enough security to get people on the platform, but they weren't going to try to make a business out of it because they couldn't. It was really hard to go as a salesperson and navigate that conversation about like, why did you sell me this insecure thing? And so they just allowed there to be a third-party security market. And I actually think that has repeated itself in almost every security market. I think how that applies to today, the cloud platforms have enough security to get customers onto the platform, but it's not best of breed security. And if you're a small enough customer, or if you have insignificant enough needs or not complex enough needs, you can use the built-in stuff on AWS or Azure or Google Cloud. But larger enterprises that are a lot more sophisticated tend to want to have best-of-breed products, and that's what they bring to those platforms. And so I think that's probably what I would have thought would have happened to Wiz and Google. Wiz would have become the thing that was good enough to bring people to the platform, but it would have been hard for Wiz to continue to have a good product across multiple platforms just because of the business physics, not really the technical reasons. And eventually it would have kind of, in my opinion, it would have kind of withered and not been as good of a product as it is today. Because it wouldn't have, Google wouldn't have been able to do the things to make it a cross-platform product, which is what enterprises tend to need. So I think not doing the transaction was the right outcome for Google. And depending on your point of view on Wiz, I mean, it was a lot of money. If they'd taken that money, I think, you would have looked at that as a successful outcome if you were an investor. My guess is that's not what's driving the founders of Wiz. They want to build a company with impact. I think they're probably on a better path to do that, not being a part of Google than being a part of Google. So from that perspective, if that's what's driving them, that's probably the right decision.
I wonder, so by the way, hi, Tavis. I want to say hi to the audience. He said it's very informative. I think so too. So I want to start with maybe we could talk about the different form of security companies. So there's identity and there's endpoint, there's infrastructure, application, data security, and meta market. So the 5 different type of security companies. Why don't we do a quick deep dive into, what are the different functions of these companies and what's the outlook from the investor perspective on which one would have a better outcome, and then how what type of founders are you looking for in maybe each of these subcategories?
Yeah. So what I call them, and this is sort of my point of view or our point of view here at Acrew, is that there's really trying to keep it simple. There's essentially 5 states, what we call estates, like very big mega markets in security. I actually think that, by the way, there's an opportunity for new estates to form, and I'll talk a little bit about that. But they tend to follow. They were created in reaction to underlying changes in the infrastructure. So the first estate was identity. Mainframes were created. People started using computers. Everything was centralized in one place. And what you really needed was access control and authorization, the key identity stuff. And so the identity market was born. It's a very big market today. It's probably tens of billions of dollars. The next real change in computing that was meaningful was the introduction of the PC. So there were mini computers that came, but they didn't really change the paradigm of how computing worked. And most of them didn't really succeed anyways. But PCs changed the world. And then a new threat came, which was viruses. And you needed a new solution for that threat, which at the time was called antivirus. I think today we would call it endpoint security. And a new market was born, endpoint security. And that is like the second estate. And it wasn't, interestingly, it wasn't the original winners of the identity market that won the endpoint. It was new companies, companies that are now you think of them as old and legacy, McAfee and Symantec is what those companies became. The next big change was client server computing, which used changed the way that applications were written, and you had a new market come there, which is network security. And again, the winners of network security were not the winners from endpoint. I mean, famously so. I mean, McAfee tried really hard to be the winner in network security. So did Symantec in its own way, and they both failed pretty badly. And Checkpoint, and then later Palo Alto became the biggest players in that market. So that was the third estate. Right around that time, an estate came out that I would call a meta estate, which is sort of products that draw information from other security products and help you do interesting things. So the biggest part of that market is the security event management market. That was another new estate. And again, it was kind of new companies that won the early part of that market. I think ArcSight, which is now part of HPE, was probably the early winner, new company in the new estate. And then the fifth estate, I would say, is a little bit more amorphous in my mind. It's kind of the application and data estate. That was the market that Imperva was in. It was smaller, and it still today is probably the smallest and the most fragmented of those 5 things. I think there are some new estates forming. For a while, I thought cloud native application protection was going to be its own estate. What it looks like is going to happen there is that is going to merge into the network. And I would probably start, instead of calling it network security, I might call it infrastructure security. And I would say for sure Palo Alto has kind of embraced that. They made a lot of acquisitions to sort of modernize their business from appliances that did network security to software that does infrastructure security in the cloud, and they've been pretty successful. And there's some big companies there, I think. And then Wiz, I think, is making a run at becoming the new category leader. We'll see if it works. We have some other companies that are in that space that are also doing quite well, and they all have their own kind of point of view. So we're invested in Aqua Security, which I think is by far the best in terms of real-time security and workload protection. Whereas a lot of the rest of the market, Wiz and others, is more about how do you adjust the posture. So there's nuances inside these estates, but that's how we look at kind of the 5 markets. Now, I do think there are some places where potentially new estates are forming. One that I think could become its own thing is machine learning and AI. It's a very different way of building applications, a different infrastructure for those applications, different data structures. So a lot of differences at the infrastructure level that I think could imply that is its own kind of large category in security, but it's early days there. We'll see. We've made a bet there in a company called Protect AI, which is actually also a pretty good example of the first thing I was talking about. They've already made a couple of acquisitions because their view, and I agree with it, is that that's a very big opportunity, and you have to have a broad, deep platform to really capture it. So they've built a bunch of technology themselves, and they've also brought some really interesting teams in pockets to sort of round out the platform. But that's an estate that I think could be growing. Another one that I kind of really want to be an estate, but today isn't so much, is humans. So like the posture of how a human operates, from a cyber perspective. I would say you talk to almost any security professional, and they'll say like that's the weakest link. The user and mistakes that the user makes, or insecure behavior by the user is by far the biggest problem. It has almost always been that way. But we actually don't have that much that really helps them. I think probably the state of the art for humans today is training, which is needed. Everybody has to do it, but it's not really that effective. And so I think there's an opportunity, especially with some of the newer technologies on foundation models and LLMs, and the way that those things can have context around what's actually happening, maybe in a conversation or on a web page or in a written format. I think maybe it's time that you can do something to help the humans in a way that wasn't possible before. And that, I think, is a big enough problem that it could, that could easily develop into what I call an estate. If I look at the existing estates and where do I think the hotspots are, I think the one that seems to have the most activity these days, although there's at least 2 that have interesting things happening, is identity. I think what people have realized is the identity market has really kind of focused on the connectivity part about that, for lack of a better word, of identity, sort of access management, mostly for humans, to be honest. But what people have realized is that there is a lot of security information in those identity activities. And so I think what you're going to see in the next few years is a market around a comprehensive identity security platform is being created right now. We have a horse in that race, a company called Silverfort, and their vision is a broad, deep platform for identity security that sits on top of essentially that layer of access management. The other thing that's happening in identity that I think is a little bit orthogonal to that is the need for a better solution for machines, for non-human identities, has become dramatically more important. And the reason for that is cloud native architectures. So cloud native architectures have kind of taken over and become dominant for application patterns. And what happens in a cloud native architecture is you take a monolithic application and you break it down into a bunch of tiny little pieces called microservices. So in the old way of doing things with monolithic applications, you had machine identities or non-human identities, but not that many. When you break one of those monolithic applications into tens or hundreds of microservices, they all have to talk to each other. So they all have to have an identity, and they all have to talk to each other. So it's not like, from 10 things you have to manage to 100, you have to manage all the connections between those. So the scale of the problem has gone up by probably 2 or 3 orders of magnitude, the number of things that you need to track. And I think the technology has not kept pace. So the old way of doing identity for machines is inadequate to handle 10,000 times the load of identity, and you're going to need to see a new market form there. There's a lot of players in that market. We made a bet on a kind of very infrastructure oriented layer, which I think is the right approach. A company called Aembit, and they do access management for machines. And so the way to think about that is, instead of helping you figure out where all the holes in your identity surface are for non-humans, they've actually fundamentally fixed that identity surface. And whereas a lot of the rest of the market is really doing that other thing, trying to help you govern the legacy technology which I understand why people would want to do that, but I think it's probably not going to succeed because the old infrastructure hasn't kept up with the new way of doing things, and it's got to change. So I think there's a lot happening in identity. The other place where like market forces have really changed, I would say, the way the world is working is in that meta market, so security event management. And what's happened is the very large cloud platforms that have the direct access to the storage have a big advantage, and they've been leveraging that advantage. So Microsoft, Google, to a lesser extent Amazon, have built products in the SIEM space that are pretty successful, and there's some sort of destiny or physics around the data is really what is driving that market, and the people that have the data infrastructure are the ones that seem to be ahead in that market. I actually think that's going to flip. I think what's going to happen, people are going to find out that trying to move all of their security data, which is a pretty meaningful amount of data, into a centralized place to operate on, is too hard, and it's too heavy and too expensive organizationally. And I think you're going to see that flip. I don't know about timing, but I think there are already some companies in the market who are saying that's not the right way to do it. The way that you do big data, if you go back to that kind of outdated term, is you take the processing to the data, not the data to the processing. And so there are companies trying to do that today. We're invested in one that is doing it, Radiant Security. Another one that I think is pretty lean forward on that is a company which we're not invested in called Anvil Logic. But I think the future of security event management and detection and response is probably going to look more like those architectures. Bring the processing to where the data is, than vice versa. Sorry, that was a long answer. Happy to elaborate on anything or go back too fast.
For sure. I wrote down so many things. I was taking notes. I want to maybe like touch about a little bit from like the business perspective on selling these different security services to the CIOs or like CTOs or like chief security officer of different companies. What does the sales cycle look like, and like how does it what does the sales motion kind of look like? Is that give them a free trial and then ask them to upgrade to each person to charge per seat, or how is the go-to-market motion kind of look like for security startups versus other domain companies?
Yeah, I don't. So there's a lot of different motions that are available. I would say the most common motion that I spend time in, but this doesn't mean it's the only motion that's out there, is what I would call it kind of top-down enterprise sales. So you find somebody in the organization who has the problem that you're selling to. A lot of times that's the chief security officer, so not the CIO or not the CTO. There are probably exceptions to that depending on exactly what your product's doing. And it's either that person or someone in their organization that you sell to. There are lots of different ways to do that. You can demonstrate value, a proof of concept, something like that. Pretty common. I think for a lot of early security companies, which is who I mostly spend time with, that's a really important part of how they sell. Is they have to go to those organizations, find somebody who's pretty lean forward in terms of willing to take a little bit of risk on a new vendor, and they have a problem that is important enough that motivates them to take that risk. So like finding those early customers is a process. And then you kind of have to partner with them. Actually, usually the earliest customers, you don't even really call them customers, you call them design partners, because you have an idea, you probably have some technology built, but a lot changes when the rubber hits the road and you get into an environment. And so you're really working hand in hand with those people to figure out how are we gonna solve your problem. And then the idea is if you get enough, enough is probably not even that many, maybe 5 to 10 of those kinds of early users, you learn enough about what the product should be doing to help solve this problem that you can then generalize that and take it to customers that are a little bit more like a traditional customer. I would say that's how most enterprise security startups kind of start out. Now, one go-to-market motion that has been very popular in a lot of other markets is like product-led growth. Like give them the product for free, let them use it, see the value, and then upsell to that organization. Every once in a while that works in security, but in security I found it's really difficult to do that. And the reason is for product-led growth to work, that first person that uses the product has to have autonomy. They have to be able to bring the technology in and use it without someone else's approval. And in security, it's pretty rare that that's the case, because just the fundamental nature of security is you don't want someone just bringing something in and using it. needs to be checks and balances on it, and that's I guess from a product-led growth perspective, that's a negative thing. But if you really think about it, that's how it should be. That's how security should work. And so product-led growth, I think, sometimes is quite hard in security. There are some exceptions. One exception, and they actually kind of started not as security, was Splunk, which back in the day, they would have called themselves IT search. But IT people could bring that in and use it, and it was free. And I remember they gave away some amount of data. I can't remember the exact number, but I think it might have been 10 gigabytes. And I thought, oh, that's a huge number. It turns out that's a tiny number for log data. And I just didn't realize it at the time. But that worked really well. They brought it in. They understand how to use it. And then they realized they needed to use it for all the data. And then they were off and running. So I won't say it never happens in security, but it is harder, I would say.
I want to say hi to the audience. Hi, Janos. We want to have a beer with you because your prediction was spot on. So I wanted to learn more about so since you mentioned about bringing on design partners. So for example, I hear a lot of startup in the early stage startup that they're in the identity security space where they help banks to detect if there's a fraud in front of people and stuff like that, or helping the IP company to discover maybe the music IP to see if this is a fake song by a celebrity or something. I wonder when it comes to finding design partners or converting them into clients. I hear a lot of people having a lot of top company in their pipeline, but how does the conversion kind of look like in the security space? Are you easily to convince maybe call like a Chase Bank or something to become a client, or how does the actually the sales actually happen through maybe designing the product too?
Yeah. So first, a little tangent. I just wanted to answer Janos. I'd love to have a beer, but I'm actually more of a bourbon guy, so maybe we'll think about Manhattan or something. That finding those early customers is as I say, probably more art than science. One of the things I tell my companies, and there are like everything, there's exceptions, is something that I've seen honestly kind of kill a fair number of security companies trying to go to the very big brand names, in particular the large banks, the largest banks. Now, those organizations have the problem, and they're very sophisticated, and they kind of know what they want. And one of the things that the large banks absolutely want and absolutely need is a lot of stuff that isn't really directly related to the security products. So they call it, a lot of times they'll call it enterprise readiness, and that's a real requirement for them. And at the scale that those organizations operate at, they can't afford not to have that. But what has happened to a lot of small security companies is they go to one of those companies, they get a big deal, and it's probably a very big deal, like $10 million. And they're like, awesome, we're going to go, we got from 0 to 10 in like one day or whatever. It wouldn't have been one day, like whatever the sales process was. And then that bank says, okay, that's great. We love your security product, but here's all this other stuff that we need you to do to be enterprise ready. And it's a huge set of roadmap items they have to take their engineering team. And they do that, and they're successful maybe at that bank. And then there's 5 other banks in the world that need that level of enterprise readiness. And the next level down doesn't really need that. Maybe there's 10, it's not that many. And what happens is somebody else who didn't get that deal with the large bank focuses on making the security product better for the broader market. And they don't spend time on enterprise readiness. And then they win the market. And that company that won the very top of the market sometimes isn't able to come down market because they've been kind of taken off track on the product roadmap to get to that market. So I'm pretty careful with my companies about who they select to be their first customers, because that first customer could be a big, very impressive logo and a big deal, but they might take you down a path that isn't the mainstream market. So so what you want to pick is a company that is, a handful of companies for your design partners, I guess, who are going to take you down a path that can generalize to a broader market. So, like I said, I don't know that I think it's a science. I think it's a little bit of an art, but that's how I think about it. So, yeah, it's great to have good logos, but you got to be careful that they're not going to take you down the wrong path.
I wonder. So, to achieve the call $300 million ARR, I guess they for you mentioned about let's call it the big banks will pay call it $10 million a year. So that means like you have to generate like either I guess like 30 major banks, or you have to generate like a ton of smaller companies. Um, how many clients does like a public security company actually have? And how do you do the client management since like everybody's gonna ask for like customized stuff?
Yeah. So that's a hard question to answer. It really depends on the nature of the product. I would say, one of the things we look pretty hard at when we look at
Mhm.
companies is what we think the business model is going to be. How big is a customer on average? And in very healthy businesses, by the way, that ends up not being one answer. It's modes of answer. An example would be, I guess I'm a VC. I'll talk my own book. We're investors in Silverfort, which is a pretty successful company in identity security, and they have different segments that they serve. They serve very large organizations that buy, pretty big contracts year over year for a pretty sophisticated set of products around identity security. And then they also have another segment that is much smaller contracts, like 5 figures, not 7 figures, that are small companies, usually, or mid-sized companies who need to have better identity security so they can get a better quote on cybersecurity insurance. And those are just two different modes. So they have, I actually don't even know the exact numbers, but it's probably like you would measure the high end customers in either tens or hundreds of customers, and you would probably measure the low end customers in hundreds or maybe even thousands of customers. I don't know the exact numbers, but especially when they get bigger, that's what it's going to look like. You're going to have hundreds, maybe low thousands of enterprise customers for an organization like that, because there's only so many big enterprises in the world. But there's a lot of mid-market companies. There's hundreds of thousands, maybe even millions. So it really depends on the markets that you're serving.
Mhm.
Actually, a good proxy that sort of normalizes across that is annualized revenue. So if you have a bunch of small customers that add up to the same annualized revenue, you probably look similar from a financial profile as a company that has a few customers that are bigger. And you need to then build your customer support and engineering organization to match what those customers need. That's actually one of the biggest reasons why we focus on product market fit. So if you have a bunch of big customers that all are doing different things, which wouldn't necessarily add up to product market fit, then yeah, you're going to get your engineering team is going to get pulled in a bunch of different custom directions, and it's going to be hard to manage. So what we look for in the early stages is what's the group of customers who are all doing some bounded set of things that are similar. Like maybe it's not one use case, maybe it's 5 use cases or 3, but they're all somewhat similar. So then they're all going to ask you for somewhat similar things. Not exactly the same thing, but somewhat similar. And it's not like you have this wide dispersion in your roadmap. You can actually focus on the thing that's going to serve the common need across those customers. And that's a really important way to manage, I think, early startups is look for that product market fit and look for, a way to define your customer base so you can segment them into something that you can service without having too much, diversity and request in your roadmap.
Mm, totally. I wonder, so maybe we could talk about like, other technology trends such as AI. So, you broadly touch upon like AI or machine learning will help like generate like a new rounds of like different companies that are doing innovation in space. Can we start with like, what would be the AI native security company look like versus the traditional security company now?
Yeah, that's an interesting question. The way I look at it is that security, probably more so than almost any other domain, is already pretty AI native.
Mhm,
We invested as a firm, and I was actually an advisor to a company called Exabeam, which is in the
mhm,
XDR space, the SIM space. They've been using what people now call AI, but I would call machine learning since 2014, and they're not alone.
mhm,
CrowdStrike uses a ton of machine learning in their products. All the big companies do. So security was a very, very early adopter of, in particular, machine learning to deliver security to market. I think it will also be, a few years when we look back, I think we'll see that security was a place where, LLMs were used very effectively first in security. So security is, I think, already pretty lean forward on being natively using different kinds of AI and delivering security to the market. I actually think that's kind of the first wave of how AI affects security. The second wave is the one that I think is happening right now, which is you need to now secure your AI applications. So not use AI to deliver security for other stuff, but bunch of organizations some of them have hundreds or even thousands of ML models they're using. Almost everybody is at least experimenting, but maybe not quite in production yet with LLM-based applications. And there's not a good, the market for security has not, grown for those. But I think it's a very, very big opportunity. So that, again, kind of talking about our investments, we're investing in a company called Protect AI, and that's the mission of Protect AI is how do you go to essentially mostly enterprises who are building AI applications or employing them in production and help them make those things secure. I think that's going to be a very big market. And there's a bunch of different technologies there. Some of it is AI technology that helps do that. And some of it is not. I think the next wave that I don't think we're ready for in the world is that AI is actually a really useful tool for attackers. In some ways, way more useful for attackers than for defenders, because the bar for an attacker is not as high in terms of quality and fidelity of a solution. So they can make themselves way more productive, so to speak, by using things like LLMs or social engineering or even like automated, finding out vulnerabilities in the things they want to attack. Defending against that is, I think, the next wave. And I think that's a really difficult thing to do. So we've been spending a lot of time trying to think through, what are the ways that we can come up with as an industry to defend against AI. So like the first wave is use AI to deliver security. The second wave is protect AI. And now is protect other things from AI. That's actually part of the reason why we think human security might become a new estate, is that a lot of those attacks that are much more effective by using foundation models are attacks on humans. It's social engineering of some sort. And so if you can help the human defend themselves against it, I think that's the start of an answer. I think it's a really hard problem. But from a VC perspective, that's great. If it's really hard, that means the people who figure it out are going to have a defensible technical moat over time. You just got to find those people that are not me. They're smart to figure that out. But I think that's what you're going to see. And I think hopefully that wave happens pretty soon. But I think the way security markets typically shake out is you start to suffer the pain of attacks happening before the solutions become mainstream.
I want to talk about so I really agree with you on some of the most iconic companies started with in the security space already have very advanced AI or ML built in within the company. So although there's also obviously will be a new generation of companies coming out. I want to touch up on the new generation of company or now it seems although there's a lot of noises in the market, that's still a really amazing time to build an early stage security company. I want to talk about maybe one which type of founder will have advantage to build the AI type of company, the new AI security company. So obviously, Protect AI is started by an industry veteran, it's a VP from Oracle, a top engineer from Amazon, that kind of things. But there's a lot of younger people who may be working as an engineer at a bank or at a crypto startup that now they're starting a security company because they have some sort of expertise, but also there's a lot of newer AI tools that they could play with. What's the founder profile that you are looking for when you are betting on the very early stage companies, and which type of people their team should be made up of? So I'm sure there should be a lot of top engineers, but where are they coming from? Should they be coming from other security companies? How do you think about from the team building side for the early stage startup to succeed in the security space?
Yeah. So first of all, I think about it in terms of teams. It's a teamwork and collaboration is something that is pretty near and dear to my heart, but also the values of Acrew, which kind of the crew part of the name. So when I think about founders, I usually think about founding teams, but I actually have an even more abstract way of thinking about it. I think you need three things on a security founding team, and it maybe four but the fourth is sort of the intangibles. But the three things that I look for that you can vet on paper to some extent, and you can kind of get some sense of it, is I look for someone who is an expert in the domain of the problem they're trying to solve. So that could be someone who worked in a security domain for a number of years. It could be somebody who worked in a non-security company but had responsibility for that domain in the company. or some other thing. So somebody who's really an expert on the security problem. These days, if AI is a part of that solution, the other thing I look for, which usually is not the same person, is somebody who's an expert in the math, in the AI, or usually it's ML, but in the data part of it. And they might not be a security expert, but they are an ML expert. I have found that if you're a company and you have one or the other thing, if you have just the security expertise but not the technical expertise in machine learning, or just the machine learning expertise, and you're going to try to figure out security, it doesn't work. You need both together. So that's sort of like the first thing is technical expertise, but sometimes there's two aspects of that. The second is somebody who has built and delivered a software product to a market before and understands what the difference between a product that you deliver to a market is and maybe like a technology enabled service. And this is a pitfall where a lot of times people who are very smart and technical in the domain, maybe they were consultants and they haven't delivered a software product to market. You need someone on the team that is about delivering software. That doesn't have to be the technology expert or the domain expert, but somebody who delivers software is really important to build a scalable, in my opinion, scalable security company. And then the third thing is someone who can get you to those first customers. We talk a lot about the nuance there. It's a hard thing. And so, and not everybody can do it, and not everybody should be able to do it. But you need those three things, I think, on the founding team. The fourth thing I would say is the intangibles. I really look for a certain kind of self-awareness and transparency in my founders, and high integrity. And so that's super important. And that's probably, that's one thing that you really can't compromise on, because you can find somebody to fill out those other three things. If you've got like a good set of founders that have 2 to 3, maybe match them up with somebody they hire or they bring on as a co-founder to do the third thing. But that fourth thing is kind of the must-have that you can't solve for that if it's not there. But those three things are what I look for. So somebody, expertise in the domain, someone who's built and delivered software products to market, and somebody who can go get the first 5 to 10 customers. I would say most commonly it's 2 people that represent those 3 things. But it's not always the case. Sometimes it's one person that can do it all, or one person that can bring the right people around them to do it. Sometimes there's founding teams that are bigger. Protect would be an example. With the founding team, I think was 4 or 5 people. And I think that actually spoke to, I really think highly of who's the CEO of Protect. He really understands how to bring the right talent to an organization, and he goes out of his way to do it. And that was obvious from the very first thing. It wasn't him founding the company; it was a team founding the company. And I think, at least in that case, they're doing pretty well. I think so far it's served them well. I think it will continue to serve them well.
I really like what you said about it's like a team that founds a company, not just one person. I wonder, when it comes to selecting the ideas that they should be able to work on, what are some kind of idea that have the longevity to, live in the next, like, call it 10 years while they're building the company?
Yeah, well, that changes from time to time. The security is a pretty dynamic market, and timing is important. To give you an example, when I first became a VC, right around 2017, what I really wanted to find was a company that was doing security for machine learning, because I thought, man, people are starting to really use machine learning. It's a very different infrastructure, which typically means everything around it, security, management, monitoring, etc., needs to have in its whole own market. And I went out and looked at that market, and I only found one company that was doing it at the time. And I met the CEO, and I asked him, who are your competitors? And his answer was like, well, there's this professor at this university and this other professor at this other one. And I thought to myself, okay, it's too early. I'm going to wait and see. And then I think it was 5 years later was when I met Ian, and I'm like, now is the time. And it turns out, it was a little bit lucky. I think at the time we invested in Protect, it was before the current AI craze had taken hold. So it was a little bit of a early bet, I would say, on that market. And then, the market's really, really happening. So we kind of, we'll call it skill, but it was probably a little bit of luck in terms of timing. But that was definitely an important consideration in our head is now the time. So when we talk about an idea that has longevity, it really does change from time to time. If you had started that company in 2017, you might have struggled. Actually, the company that I met with is still around. It's called Calypso, and they do security for AI. And they're actually reasonably successful, but it could have gone another way. And they're successful because they sell primarily to the U.S. government, which had which is its whole own little world, and they have their own set of requirements, and they, at least for military uses, have been using this stuff for a long time. So they have a different class of problem than commercial sector. So that worked out for them. But a lot of times people start a company that's too early. So timing is something that you really have to be thinking about. And the things that I think impact timing, there's a number of things. Like one really important one that I think comes up a lot in our thinking about security today is that what's possible today is different than what was possible even maybe just a couple of years ago. So like, I know AI is very highly hyped, but LLMs make possible things that it wasn't really possible to do even as short as like 3 or 4 years ago. And so that's a timing question. So what wouldn't have worked 5 years ago because you didn't have this technology, now we have it. So what can you do differently? And that has to be input. It's really hard to project out 10 years. They're thinking I've come with an idea that's a 10-year idea. 10 years is a really, really long time in technology markets. That's actually probably even less time. A lot more changes over 10 years now than changed in the last 10 years. Like that's part of what I was talking about with like the speed of adoption of security technologies is so fast that 10 years is like 5 times the amount of time you need to get to 100 million ARR. So that's a lot. So the way we think about that is going back to that concept of estates. Like if you have an idea that can grow into a platform that substantially solves the problem for one of those estates, whether that's an existing estate that you're going to come into and make better and reinvent, which has been, by the way, probably the most successful recipe for security companies historically, or you're going to create a new estate. I think the reason why I say it's been the recipe for most successful security companies, if you think about the biggest security companies today, you got Palo Alto, which really reinvented the network security space, a couple of decades ago, and got very, very big as a result. CrowdStrike reinvented the endpoint security space and became, I think it's the second biggest company in security. So our view is that identity, it's kind of identity's turn. So like Palo Alto did it in network, CrowdStrike did it in endpoint. I think it's identity's turn, so to speak. I think there's an opportunity for someone to do that in the application and data space. Like that was the space we played in at Imperva, but it was kind of a newish market when we were doing it. I think actually what's possible in application security and to a certain extent data security is different today with the way that AI technology could work, and especially because it has so much context around applications and data that I think you might see a company like recreate the whole space of application security. I think that's probably behind identity security. I think it's happening now. I think application security, I think it has the potential. And I would say that meta market is also a place where there's a lot going on. And I think you could reinvent the meta space. It's smaller, it's like structurally smaller than the other spaces. I think, network, endpoint, and identity are very, very big markets. The meta market sort of lives on top of those. So it's like a secondary market in that sense. And it's a little smaller, but it's still pretty big. So that's kind of how I think about that is like, do you have an idea that can generalize to be big enough to capture one of those states? And that's where you're going to see the really massive outcomes.
I wonder, can you talk about, let's say, since you have been at like Imperva for over like 13 years, like what was the journey like from like a really earlier, like, startup to like the major phase, which is the fast growing after you hit the inflection point to eventually it's like a big success? How do you kind of like categorize like the benchmark or like the master score to get to each stage?
Yeah. So the way I think about stages is in kind of round numbers of ARR, and don't take it too seriously, but it's actually probably a pretty good proxy. So the first stage is 0 to 0 really, but like building the first product, and that's the very early stage. That's companies with maybe a couple founders and a couple of engineers building the first thing, and that you gotta build something to get out there in the world, and then you got to get friction with the market. So the first stage is really 0 to 1. 0 to 1 in ARR is when you're trying to figure out if the thing that you've got matches a need in the market, and it's a very high correlation, I would say, but not causal. That at about 1 million in ARR, most companies probably do have product market fit. You can get false signals there. So a lot of my founders want me to tell them what the number they have to get to in ARR to have product market fit. And I'm very careful to say that it's usually around 1 million, but that is correlated, not causal, because what you're really looking for in market fit is what we've talked about, which is a group of customers that all look kind of similar in terms of what they're going to ask you for, and so that you can now have a roadmap that you can practically manage, and it's not taking you in all these different directions. It usually happens around $1 million in ARR. What's interesting in both kinds of businesses, if you sell small businesses, you probably have 50 or so customers that get you to that, and that's how many you need. And in large enterprises, you might have 5 that get you to that, or something like that. And so somehow ARR is a good proxy for that, or a good indicator. But again, I'm very careful to say it's not causal. You have to look qualitatively at the customer base and what they're asking you for, they're using the product to sort of judge that. And so that's a really important phase of the company. And it's not every company gets through that. The next phase is 1 to 10, where you're you're figuring out how your go-to-market's going to work, and you're making sure that it matches that product market fit. So if you do high-end enterprise sales, but you're selling deals that are $10,000 a piece, that's not going to work. That business model doesn't work. It's too expensive. So that's what you're trying to figure out in 1 to 10. And then I would say traditionally 10 to 100, you're expanding your distribution. Maybe that's globally, or you're finding channels that can dramatically increase your reach. And so you're building a go-to-market machine from 10 to 100. And then the next one is 100 to $1 billion. But I think what you're finding is it's probably like, I guess, 100 to 300 these days. Like once you get past 100, you have to get to the public markets. And I would say then you have to look at solution completion. And despite the fact that some people think it's a dirty word, and in some ways I think it's a dirty word, it's platformization. When you get past 100, you have to have a broad enough product set that you can actually show sustainable growth, on the path to $1 billion in revenue, because the public markets aren't going to accept you unless you have demonstrated, good execution and, probably not even low double digits growth, but also have a story that is believable, that you can continue to do that kind of growth for at least a few years to get there. And in order to do that, you have to have a pretty broad product offering, which is its own hard thing to do. And I think that's part of why, as the bar for being public has risen, you're not seeing as many companies, or in fact, in the last couple of years, you've seen any companies go public. But I think that's the program after 100 is how do you build a platform that's broad enough to sustain, pretty meaningful scale and growth at meaningful scale.
You mentioned about building a platform. So like, what would you say would be like 3 things that you suggest the founders to do right now to build like a great platform?
So depending on the stage, I might not tell them to do that, by the way. So in that 0 to 1 stage, it's not always, and it's probably often not the right thing to do to try to build a very broad platform. There are some exceptions, depending on the nature of the market you're going after. The first thing you want to do is find that first customer base. And that probably is a mix of the kind of companies you're selling to and the function of the people that you're selling to inside that organization, and then make them an advocate. And then you can kind of do an iterative process. Like you've got one product that they like, that maybe that gets you to 10 million in revenue because you're able to sell to customers. And then you can add a product that expands, either expands your share of that person's budget or that group's budget, or maybe it expands to an adjacent group. And so you're now serving 2 groups in an organization. And so you can add to the platform all of that. So when I think about how I talk to my founders about this, I like to know that there are a couple good directions to go in to broaden out the product, but I don't know that you necessarily want to focus on that too early, because you got to get that first product right. So it's a little bit of a balance, I guess.
I have a very detailed question, which is, like in the YC directory 2024, there's like 79 top security startup founded by YC founders throughout the years. And how do you quickly filter out like which one that fits into your arena versus not? And you mentioned about like, there's a lot of acquisition that's happening. How do they become like attractive acquisition target if they wasn't as competitive as like many other startups in this security market?
Yeah, so that's interesting. I'll tell you how. So I guess the first question is, how do I filter for companies that I'm interested in? We're pretty thesis driven here at Acrew. So we have, we have thoughts about what we think are the big opportunities in the market, and we might not be correct about all that. I've been wrong about lots of stuff in my life, but that's part of the job. Is you got to have, if you're going to do that, you got to have a point of view. So we have a point of view, like what domains are interesting to us. And I've talked about a few of them right now. There's probably a few others that I didn't mention, but human security is one that we're super interested in. I think for its own sake, probably, but also especially as it relates to protecting against the threat of AI and deepfakes. We've invested behind a couple of areas that we thought were interesting, a little while ago. And so I talked about a couple of our identity companies. I think security for AI, our investment in Protect AI. One of the themes that I broadly think is really important is productivity in security, which is very broad and can show up in a lot of ways. If you go out and see how people talk about talent in the security industry, people will say we have this talent gap, a skills gap. But the thing is, the skills gap is meaningful. It's like we need 4 million more people to do the job of security in the industry. We only have probably 4 million people in the industry. So I think that's just not going to happen. That's unrealistic to think we're going to get 4 million more productive security people in the industry. So you can't look at it. I think it's not productive to think of it as a skills gap. You have to think about it as a productivity gap. So how can you bring technology that makes the existing people in security more productive? And I think there's a huge, and LLMs, one of the things they're really good at, they're not good at everything, but making humans more productive. So we have an investment, I think I mentioned it, Radiant Security. That's what they do. They help make the analyst in the SOC who has to investigate incidents dramatically more productive. And that's how you're going to solve the cybersecurity skills gap. Another area that I think is a very high potential is in mitigation. So not necessarily the investigation side, the detection side, which is kind of more where Radiant plays, but most organizations have thousands, maybe even sometimes millions of security findings in their organization, from vulnerability scanners and posture scan, all this stuff. And they can't really make a dent in all that because it's so hard to correct. Some of the stuff is really easy to change. And so that's the stuff that gets done. But some of it might break the application and you can't afford to do that. So I think there's a big opportunity to sort of look at all of the findings and all of the things that are implied that you need to do to fix those findings and automate that. And so instead of having an army of people that go out and change stuff, maybe you have some technology that helps them do that. So that's an area that we're looking at right now that I think is a big opportunity. So I think that's how we look. Like we have a point of view on what we think is interesting in security, and that's how we select companies. I gave you such a long answer. I forgot the second half of the question.
Oh, it's just like if a startup trying to be acquired become an attractive acquisition target for bigger companies.
So I think it's a different mode than a lot of the times what we focus on, which is I think there are a lot of pretty successful outcomes that are not IPO outcomes, they're acquisitions. In fact, that's by far the most common outcome in security. I think the way to make yourself attractive as an acquisition is to deliver value. Honestly, it's to deliver value to the market, and that will serve you well. So I don't usually counsel my companies like you should do this because it makes you a more attractive acquisition target. I counsel them, you should do this because customers will get value from that. Mm-hmm. And if that's true, if customers are getting value from your product, either a big platform is going to say, well, that should be a part of what I do. Like it strategically fits into my product set this way. And that's going to have value for them. And they'll figure out, the stuff around the edges to integrate it and whatnot. Or that you're going to keep going and keep getting bigger, and maybe you do make it to the public market. So like focusing on delivering value to the customer set is, I think, the way to drive value. And you probably do need to do some things to make sure you're engaged with the ecosystem, so that if they do want to acquire you, or someone in your space, they know who you are and they know what you do. So like I think that's part of the job of the CEO, is to be engaged with everybody adjacent. So that's direct competitors that are small and big, and like adjacent market, the corp dev execs and other execs at bigger companies. That's part of the job of a startup founder, is to like be engaged with that universe. But in terms of what you actually do, other than that, I would say focus on delivering value to the market, because that's where value derives from, whether it's because you've grown into a public company or because of maybe another different company sees value and wants the value.
I really agree with that on like, focusing on delivering value, and hopefully the outcome will come and engaging with the right people to get on the radar before like they're thinking, oh, before they're like actually finding solutions. I wanna end with like a quick fire round for you.
Okay.
So first question, what's your favorite book?
What's my? I'm sorry, I didn't hear.
Favorite book?
My favorite book. Oh,
Mhm.
Zen and the Art of Motorcycle Maintenance. It changed. It literally changed my life, and I actually personally think every human being should read it, but every founder should read it because it has a point of view of um, how to go about making something successful that I think is an unmatched. And it's not like detailed instructions for how to do that. It's basically like if you really care about something, then you will figure out how to make it successful. But you have to start with that care.
Wow, that's deep. I love that. So who made the biggest impact in your career?
Who made the biggest impact on my career? I'd probably say Shlomo Kramer. I've had a lot of people that I'm very fortunate to work with. One of whom has made a big impact on my career is my partner and co-founder Teresa. But I'd probably say Shlomo. So I went to work for him when I decided to get into earlier stage companies. Imperva was a job I took, and he taught me a lot of things. And he's an amazing person and amazing founder and entrepreneur. He's the CEO he was the CEO of Imperva. He was the founder of Checkpoint Software before that. He was the founding investor in Palo Alto Networks. He's now the founder and CEO of Cato Networks, which is one of our investments, and they're an amazing company. But he taught me a lot about, I guess, a lot of different things. Some of it was about work and business, but a lot of it was about other, personal stuff. So I would say Shlomo Kramer.
Mm. How do you feel like so like a founder have like multiple success? So I feel like that's just not like a luck game anymore. So like how do you think like they're differently wired compared to a bunch of other people?
How founders are differently wired.
No, no, no. How like, you just mentioned about the person who made the biggest impact was like a successful serial founder, right?
Yeah.
So how is a serial founder kind of wired differently versus like a founder with like a one-time success?
Yeah, it's interesting. I asked Shlomo that question at one point, and he told me this really interesting anecdote. He said um, he had read this short story about a guy who steps into an elevator and realizes that there's no elevator car in the elevator shaft, and he starts falling in the elevator shaft, which is concerning. And and then he realizes that the elevator shaft is infinite, and he's never going to stop falling. And so then he starts doing things because what else is he going to do? And I didn't really understand the answer. Like that was his answer. I was like, why? My question was like,
What?
you're at Checkpoint, and now you're at Imperva. Like, explain. And that was his answer. And I thought about, and that was a long time ago. And I thought about it, and it's like, I think what it means is like there's a certain mindset, and like this is what he does, and he loves it, and he's always done it, and he probably always will. And I think that's the mindset of a great founder. Like that's kind of how they operate, or at least that's how he operates, I guess. So I do think there's something different about founders. And I don't know that there's just one size fits all. I think some people are really mission driven. Some of the best founders like really want to make an impact on something personal to their lives. Um, some people just have a drive that they like to create things. So it's hard to say, but there is something there that's a little different with founders.
Mm. Uh, who would you invite to your dinner party?
Who would I invite to a dinner party? Do they have to be alive?
It's your party.
It's my party. Well, I this is I probably, and they aren't alive. My grandparents. That'd be nice.
Um,
Small group.
for sure. That's very sweet. Where can we find you outside of work?
Where can you find me outside of work? Probably hiking out on trails around the Bay Area.
So you can see a bear. I'm just kidding.
Well, no, we're not bears. That's probably a good thing. We don't have bears in our name. We do have mountain lions, but I don't have as much of an affinity for mountain lions as bears.
Amazing. Wow. Mark, thank you so much for coming on the show today. It was such a wonderful like security market um
Yeah.
masterclass for everyone.
Thank you.
Let me quickly